Right now, by the way, you mentioned the Dow trading, well, session lows down 415 points. Is this where we're headed again? We're about a little less than an hour and a half before the closing bell. Does the skittishness kick in again, and do we hit the sell button? Of course, this is after yesterday's dramatic 831-point drop. Historically, by the way, October has been a spooky month for stocks. Deirdre Bolton, Charlie Gasparino joined me in. Charlie Gasparino turned up and he had a blackbird with him.
Yeah,
not a live one, but
yeah,
is that spookiness?
This is, it's like a black cat walking by you.
Deirdre Bolton, what is it about October and stocks? Should we be, is it historically...
Go ahead, ask your question.
By the way, that thing has
fleas. Like a pirate.
Thanks, Charlie. A little pertinent information after the fact. Yeah, so for the past 50 years, if you look at data, you will see that October is actually the most volatile month. So we have, VIX charts, everything else that proves it. You always have this spike in October. Oddly enough, it actually, on average, October stocks finish higher. However, some of our great missteps, right? 1929, for example.
That was a biggie.
2008, I shouldn't skip 1987, but then 2008 technically starting in late September, but clearly carried over into October. So it does have the justified reputation for being the most volatile month, bar none of any of the others, but not always a down month. However, these days, I think it's pretty clear between yesterday and today, we're looking at a showstopper.
We are. Well, Charlie, you brought in the blackbird. I have no idea why, but thank you. So where do we, I mean, what is this? Look, I've had a couple of analysts now say, you know what, it's okay. It's not that, it's not a capitulation. It's shaking the trees. It's not a bad thing. Flush out all those that are not convicted by this.
Puke it out, right?
Puke it out, and then we'll be ready for another leg up.
That is my initial response to it. But, listen, these are all
Are you
opinions.
now a little more skeptical?
I'm just saying that, listen, look at what was structurally wrong with what went on in 2008. And it's kind of interesting. By the way, the downdraft continued through to March.
Right.
2009, when the Dow hit 6,000.
Right.
So it wasn't quite like an October thing. It was September, October, November, December, January, and then the Fed started massively printing money. But look at what's going on now. Now we're getting the unwind of the Fed printing money.
Yeah.
I'm sorry, I got a little bit of a little hay fever here. That could be a structural problem for the market. I mean, we have a better economy. We have an improving economy. We have corporate balance sheets are pretty good, right? Banks aren't impaired.
Right.
I mean, you can make the case there's too much debt on corporate balance sheets because we had interest rates too low. But, by and large, the structural problem is not with banks and corporate America. It is with the Fed's balance sheet. So if the Fed really does, and you could tell, there's a tell here. Listen to President Trump going after the Fed chairman pretty directly.
What do you think about that, Charlie? I don't, but
he can't fire him. By the way, I don't care what anybody says. I heard John Hilsenrath, who knows a lot about the Fed.
Yeah, of course.
But he can't fire him for cause, and he could say he's destroying the economy. That's his cause. He could get impeached over that. I mean, you could see a political sort of backlash.
He's not going to do that. He's just upset that going into the midterms, the markets are taking a downward turn, and he's trying to find a villain, right?
I don't think you know with Trump what he might do. I mean, he fired Comey when he probably shouldn't have. I mean, I'm just saying it's more than theoretical that he could fire the Fed chair if because the markets are clearly trading off the Fed stuff. I mean, the unwind, the higher interest rates.
There's a lot of traders, though, who say they don't understand why all of a sudden you had that 40 basis point move in the 10-year Treasury, saying, like, the Fed has actually been pretty transparent, saying...
And it's moved slowly.
And has moved slowly. So there are some people who, along with us, say, like, why all of a sudden... Yeah. And why all of a sudden this kind of...
It could be. It's kind of a tepid...
But in the bond market...
Yeah, but when Jerome Powell, Charlie, says, well, we're far from neutral, it does spook the markets. Well, how far up are we going to go before you consider it neutral?
Listen, if you don't unwind the Fed's balance sheet, then what happened, then our money, the dollar bill, is worth nothing, right? If you think about it.
That's worth nothing, unless in the old compared to everything else, we look better. Which we always talk about that sort of funny thing, cleanest, dirty shirt in the closet.
Maybe we won't look good compared to the German currency or some other currency at some point. Whatever. I mean, the whole notion when we got off the gold standard was that the Federal Reserve would create money supply and would instill the confidence in the dollar, the full faith and credit of the United States. If the Fed says the dollar is worth whatever we say it is, if we can print as much money as we want, then the dollar is not worth that much. And at some point, that creates a problem. At some point, we are no longer the fiat. We are no longer the base currency of the world, and maybe some other currency.
What about the inflation argument? Is it we got the latest consumer price index today was less than expected?
Right, which seems to
Do we really
reassure...
have an inflation issue here? It's a hot economy, but I wouldn't say prices are particularly hot.
I mean, that was a good data point to have because, as many people have pointed out, usually when stocks and bonds sell off at the same time, it can happen for a few reasons, but one of the reasons often is a worry about inflation. So that did sort of cool off, and if you look at the 10-year yields, I think they've come off a little bit. Yeah, so it does seem to be sort of manageable. I mean, I feel like the fundamentals look pretty good.
You could have higher interest rates without inflation, and just two ways. Two ways you can have it. Fed, historic, good column today in the Wall Street Journal about this. Their lead editorial. You can have the unwind of their balance sheet. That means they sell bonds. Prices go down, interest rates go up, right?
Right.
You can also have higher deficits. And, another thing I don't think people are getting their arms around, the economy looks really good now.
Yeah.
We don't know how sustainable it is. I mean, they gave a massive corporate tax cut. It was, I think, a lousy individual tax cut. This is a consumer-driven economy. Can we maintain 4%?
Well, does that impact fade away next year?
Well, that's the whole thing.
That's the sugar rush concept, right?
Yeah, if we can't maintain 4% growth, you don't have the higher tax. You don't have the higher tax revenues. You're going to have more debt. You're going to have higher.
I was watching oil and energy a lot too. So today, again, another example of something that's come down.
Right.
But I mean, in the past month, we've seen energy prices go up 10%. So for a lot of the country that has to fill up at the gas pump, that also becomes a tax on the consumer.
But these are, I'm sorry.
Yeah, go ahead.
But these are longer term, I think, issues. I think short term, the economy still feels good.
It is. I mean, the fundamentals have not gone away overnight.
And one other thing, short term, actually, I get this. We're in a blackout period, right? So corporations can't tell us about earnings because of the SEC disclosure rules. They can't do stock buybacks for the next couple of weeks. In that sort of, I guess, in that void, people start selling stuff. So remember, I think we're given long-term worries, which are real, but I mean, short-term, it doesn't seem like.
Banks are up
by the way, as I'm saying,
right?
the market's down 500 points.
We are off 524, 533. Here we go again. We're starting to move down. Is this just the institutional guys fighting it out, duking it out? For the individual investor, they're just watching this. Is this computer algorithms, everyone punching buttons, going through levels?
There is a.
I mean, how much of this?
There is a degree of that when certain levels are hit, and certain inflection points, algorithms kick in.
Sure.
There is, listen, I mean, if you think there's going to be much higher interest rates, you're going to sell stocks.
Right.
One other thing.
Also, it's after a 9.5-year bull market, right? So a lot of people have made a good amount of money.
But is this the top? Is this where, finally those who are predicting the end of the bull market are going to be right?
Here's the interesting thing. If you talk to the average retail investor and you say, suppose you can get guaranteed on a 10-year 4%.
Yeah. Would you take it?
Well, a lot of people, I think, would.
I think
after the past few
that's
years.
something to be worried about. I mean, if you're investing in stocks right now.
4% is the tipping point?
I'm just saying, it's 3.5 now, right? I mean, if someone guaranteed me 4% and I could sleep in that, I don't have to worry about, Elon Musk saying something stupid that sends the stock of Tesla down, because what happens is when you have super low interest rates, you go out on the risk spectrum, right? You buy Tesla, the new fad, and I try to ride that up with all these other stocks. If you could just sleep at night and get 4%, right, you might do it.
That's tempted, something which we haven't had as an option for a very long time.